Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look as usual on the gold market. So price action, recent few sessions stands also in tight range, in the same manner as the forex market. This is understandable in the current situation because everybody across the board are waiting for Fed statement. In general, our longer term view suggests some moderate retracement on the gold market because, as we have mentioned many times already, the market has hit major target. It's 1450 is the all-time target on the monthly time frame, on the weekly, some extensions on the daily here was as well. So, and overall price action suggests some normal response. At least the major 30% retracement should happen. That could last for a few months probably. Currently, on technical point of view, you could see that market is forming kind of wedge pattern here that indicates the enhancing of the bullish power. And once the market has hit the target, you can see this bearish engulfing pattern has been formed. As it happens very often on the markets, the bearish engulfing usually has an extension that equals to the length of the bars. And in most cases, it takes the shape of the ABCD pattern on the lower time frame. It means that somewhere on the 4-hour time frame chart, it should be some kind of the ABC top D pattern. Also, we have estimated that currently we probably should treat as a floor an area around 14 even level, because this will be daily oversold and FIB support, and that probably could be treated as the bottom of the first stage of the retracement. So if leg down will follow, its most probable destination point will be somewhere around 1390, 14 even. So that's in the short term speaking our trading plan on the market. Meantime, in recent few sessions, as I said, market shows very tight price behavior, and here we do not have a lot of issues for discussion. So we do not have some clear patterns, setups that could be traded immediately because market just waiting for a Fed statement. On the 4-hour time frame chart, we could just suggest that probably we could get this kind of the pattern, which is the ABCD down. Also, it's important support area here. You can see this trend line of the former triangle that we have traded a couple of weeks ago. As you can see, market has tested it twice. So first here was pullback, here it's downward action. With this downward action, market has hit our XOP target and turns to this upside retracement. This price action definitely is a retracement because it has no thrusting action, a lot of overlapping candles, long tails. So this is, by the price behavior, is more suitable, typical for retracement kind of action. And as a result, we could suggest maybe pairing of the cartridge cheaper to sell. That's actually the only pattern that we have. Since we suggest that statement by the Fed should be more hawkish than market initially have suggested, and we do not expect any 50 basis points drop of the rate, we think that the Fed should use the 25 basis points rate cut as the disguise for a changing of the policy from the too dovish to the neutral policy, so it should become more hawkish in the comments. As a result, that could be the trigger for downward action, and this is the first destination point that we will keep an eye on. So take a look. This ABCD pattern has the 1319 target that agrees with the daily support. The pattern that could trigger this downward action could be maybe this one. It's currently what we have. Taking a look at the hourly chart, you can see the whole history of our trading here. So that's our ABCD. As we have suggested, indeed, the butterfly has been formed on Friday, and market has collapsed right to the XOP. 1411 as the agreement was. And take a look at this price action. This mostly sideways upward retracement stands here on the market. So currently, it's difficult to advise something because everybody understands that it's all twisting and turning right now around the Fed decision. And by putting bet, you automatically will take the bet on the Fed statement. We just can't call for that. Just could suggest that different situations that you could follow depending on your view on the market. For example, if you have bearish view, you could use this pattern for taking the position with the maybe stops above this top or something of that sort, with hoping that market will collapse on the Fed statement. Or you could use, for example, of this channel that's developing here, placing some stop entry order when the market will break it down, or using some other tools. For taking the buy position, well, you need to probably keep an eye on this possible breakout, this upward continuation. But in the current situation, guys, any long trade will contradict to our longer term view, and we do not have the necessary background for that. We do not have the bullish context right now, because on the daily chart we have the bearish context, and any upward action here could be treated only as a maybe some deeper retracement or something of that sort. So we do not have the prepared trading plan for trade gold on the long side right now, and that's why we do not consider currently any long-term position seriously. So it might be some very short-term trade, but with the daily time frame, with the follow time frame chart, we do not have the good background for taking the long position. That's why the only way that we're considering is the bearish scenario, and for the bearish scenario we could see some setups that are forming. The conservative traders, it's better to wait for a Fed statement, the fact of the Fed statement, and then act based on this statement. Do not trying to foresee what Fed will say. Don't try to predict what statement will be released, and take the position by fact. So only when the Fed will release its statement. That's what we actually intend to do. But this is very personal, so if you'd like to trade precisely the moment of the Fed statement release, you could try to do this. Here are some patterns that you could keep an eye on. Maybe this will be useful for you when trading.